Good morning, traders and investors. My name is Shen Mongangi, your best market analyst here at HFM. So, what do we have for this week? This week, so yesterday, uh, t- uh, yesterday, the US 500 and US 100 closed as at its all-time highs, despite ignoring stronger than expected jobs data. Also, global markets are closing a volatile week on a decisively risk-on note. A strong corporate earnings and relentless rally in technology stocks overshadowed the complex messaging from the U.S. Federal Reserve, and yet indices climbed to fresh all-time highs yesterday, largely ignoring stronger than expected job jobless data claims. Today, the focus will majorly be on the UK and Canada, uh, which will be the driving force for today's trading session. Right now, I can see the GDP news is already out, and we are at a negative 0.1. So it's a worse than expected report because we were expecting a 0.1%, and you got a negative 0.1%, including also trade balance is a negative, and manufacturing production it's a negative. So let us see how this news has affected JPP. On the daily chart, I can already see we are below the 1.35690, and we are printing a strong bearish candle. Let me move to our lower time frame. Clearly, I can see how the news has affected today. We opened London opened London open was exactly when this candle was released at 9 a.m. today, and I can see we had that uh, strong bearish candle, and still the strong bearish momentum is yet to continue because the news came out worse than expected, and therefore we are going to get that large bearish momentum on the JPP USD. Also, other news that is coming up, we have Canada coming out with their sorry about that. Also, we have Canada coming out with their unemployment rate, and if you're trading anything that has USD card, you should be prepared because you're going to have some form of volatility on anything that has card, and that includes USD Canada. So for this week, upcoming today, that's the UK GDP and the Canadian dollar. And this week's summary, the week has been a whirlwind of shifting narratives. We began with a risk-off sentiment due to trade jitters because we had the July 9th deadline for the trade tariffs, of which has been shifted to August 1st. Then we were followed by the central bank surprises from Australia and the New Zealand. And then in the midweek, there was a release of the complex FOMC minutes, which highlighted inflation risks from the tariffs. And let me explain this inflation risk from the tariffs. You see, when the tariffs came out, the tariffs only most of it affected the manufacturers. So it hasn't yet reached the consumers. So manufacturers, suppliers, consumers. So there's a chain that has to follow for each to reach the consumers. So the consumers haven't yet felt the effect of the tariffs, and that's what Jerome Powell has been speaking about, and that's why he doesn't want to cut interest rates at the moment until the effect of the tariff has been felt. The whole chain has felt the effect of the tariff, and therefore he will know what to do after that. So that was this week's summary. Coming on to gold, yesterday gold saw some modest gains, climbing towards 2015. Let me go to gold, climbing to 2015 per ounce despite the strong risk on mode in stocks, and the metal benefited from some safe haven demand amid lingering trade uncertainties and as a potential hedge against inflation risks mentioned by the Fed. Today and this week, gold's direction into the weekend will likely be influenced by the US dollar reaction to the overseas data. The key technical level remains the support as its day at its 50-day moving average. That's at its 50-day moving average, and a close above 2020 will be a constructive sign for bulls, while a drop below 2000, a close above 3000, not 2000, 3305.36 will be a constructive sign for bulls, while a drop below 3330 will be will show further weakness for gold. As you can see, these are the levels that I've marked: 335 and 330.19. Yesterday, if I move on to the dollar, we had some mixed signals in the dollar yesterday. If I move on to the daily chart, yesterday we had some mixed signals on the dollar, losing some ground to the euro USD near 1.11740 and the pound near 1.3600. The strong jobless claims provided some underlying support for the greenback, preventing a steeper fall. And therefore, today and this week, today is all about JPP and the CAD. A stronger than expected UK GDP report, of which we have seen it's a weaker than expected, which has influenced the GDP to move down. Similarly, the Canadian jobs report will be the primary driver for all Canadian pairs, including USD CAD. And lastly, I'll move on to our oil market. So yesterday's oil prices showed some form of bearish momentum, with it hovering around 66.89 per barrel. The market continued to digest Wednesday's bearish inventory report, with concerns about US stockpiles outweighing the signs of strong gasoline demand. So this, according to the report that came out by the AIA on Wednesday, showed us that we had so much supply that it exceeded demand, and when you have so much supply than demand, prices tend to fall, and that's why you have that fall that came from Wednesday and continuing all the way to Thursday yesterday. Today and this week, the prices of oil will likely be influenced by the strength of the US dollar and the overall risk sentiment to close the week. A strong dollar could act as a headwind for this crude oil. So, we have checked the US 500. One thing about the US 500, it has already hit its all-time highs with only 3 pips ahead, with only 3 pips on the top, because the previous all-time highs was around, if I can mark it, the previous all-time high was at 6332.77, and right now the all-time highs it's at 6335. So it's only a difference of 3 pips, So yeah, and also the same for the US 100. We hit our all-time highs yesterday. So we have some form of bullish momentum on both indices, and one of the reasons why we have that form of strong move is because of Nvidia is one of the now hit 4.4 trillion in $4.4 trillion yesterday. Nvidia hit it, and it's showing it's showing underlying strength, and because of that, the reason why you have underlying strength is it's because of the rise in AI. And if you can see Nvidia, we can see it has this month and last month we have only been hitting highs and highs and highs with zero to less pullbacks on Nvidia. At the moment, right now, we are at the 1204.50 level. So with that said, we have checked both our US indices, gold, forex pairs, and also lastly the oil. We will also try to diversify and look on other assets as we move on next week, and so that we can diversify our portfolio and trade even more assets. So with that said, my name is Shen Mongangi, your best market analyst here at HFM. And not to forget, we have our online classes starting daily from 4 p.m. all the way to 5 p.m. And also we have our physical classes starting from 11 a.m. all the way to 12:30. and our traders clinic from 2 p.m. all the way to 4 p.m. So we have 3 classes. I'll mention them again. Physical classes 11 to 12:30. Our traders clinic from 2 to 4, and then we have our online classes from 4 to 5. So for all who are joining us, we're pleased to have you here. Thank you for joining the live stream also, and see you same time, same place on Monday. Goodbye.